G'day folks, welcome back to another update for natural gas. Now the daily chart is continuing in a bullish momentum, especially after the hourly chart has also broken to the upside as well. So before we go any further, make sure you hit that like and subscribe button to support the channel. Also reference the +1 videos for a deeper dive into some of our trading strategies. Now as of today, October 6, the global natural gas market is being shaped by both geopolitical tensions and strategic developments. In Ukraine, Russia's drone and missile attacks on naphtha gas facilities have caused significant infrastructure damage and power outages, highlighting ongoing conflict risks. I'll cover that in the more detail in a minute. Hungary is diversifying its supply away from Russia through a major LNG deal with France's Engie, improving energy security. Mozambique is expanding LNG production with a second floating unit, boosting supply despite regional security concerns. In the US, rapid LNG export growth raises a potential for oversupply and price volatility. Meanwhile, in Australia, we face looming gas shortages due to policy failures, underscoring the need for clearer energy strategies. So here to put it in a bit more context, I'm going to be including this Google Maps view of the world, showing key geopolitical events, and the latest ones we've identified are the attacks on Ukraine here, and I've also identified here some other natural gas, I suppose, attacks on key infrastructure of these particular countries in Iran, Iraq, etc. And there was a gas pipeline there between the Russian area there and into, it looks like Turkey. Actually, it was a Turk Stream pipeline. But again, we're going to focus today on the Ukraine attacks, which happened on October 5th. Basically, on October 5th, Russia launched its largest aerial assault on the war on Ukraine, deploying over 380 drones and 35 missiles. The primary targets were natural gas facilities operated by Ukraine's state-owned naphtha gas group. The strikes caused severe damage to gas extraction and processing infrastructure in the Kharkiv and Poltava regions, leading to power outages and civilian casualties. So that's the Kharkiv region there, if I zoom in a moment, and that's the Poltava region where the attacks happened. Ukrainian officials condemned the attacks as deliberate terrorism aimed at denying civilians warmth during the harsh winter months. In response, Ukraine, using long-range drones, struck facilities deep inside Russia, including an oil refinery in Orsk. And that oil refinery is up there, and that's the Orsk oil and natural gas refinery company. So coming back to our charts, we look at the weekly trend at the moment, and that's broken up through the moving average band, although I just noticed that moving average band on the weekly is still in a bit of a downtrend, but that's a positive, breaking through that moving average band. The CCI has already broken through that, and that's also turned up on the moving average band, so that's a bullish momentum at the moment. On the daily, we've got this break above the moving average band again on both the CCI and the price, and you can see there those moving averages are widening at the moment again after a bit of a contraction back there during that period. And there is no divergence at the moment in play. There was a bullish divergence back here with a double bottom on the CCI previously versus lower lows on the price, and that bounced, and that's where you would have started going long from that period, ideally around about this area. That's the daily. If you're trading that on the hourly, you should be trading according to those arrows there. And on the hourly, if we zoom out a bit, you can see that you would have started going long from that period, and you would have been paying attention to these bearish divergence to keep your profits or keep your money on the table as long as those moving averages on the price are moving higher. But as soon as they start breaking down, you could probably start taking your profits in line with a potential reversal. You can see there a bit of a false break to the downside. You might have closed out there initially. It recovered, then it started breaking down according to that bearish divergence. Back here we had a very narrow bullish divergence versus lower lows on the price, and that bounced quite strongly, more than 100% Fibonacci retrace of that range, and then retrace back to the downside. That was possibly another bullish divergence with a double bottom there on the price. I didn't mark that. I missed that actually. That was in fact slightly lower versus higher lows on the price on the CCI, and that was a bullish divergence, and you can see there went well beyond 100% retrace. Now at the moment we did have this target range before our last video. It just touched it with that bearish divergence, and we did say the CCI was still dropping, and in fact the price rose a bit, but then it finally broke right into that 23-38% Fibonacci range. And for those new to the channel, just to explain how Fibonacci is measured, we take it back to that significant low before that divergence started, and we measure it to the 23-38% as a minimum. Sometimes they fall a lot further. Often they just touch it and bounce out of there, and that's what it's done in this case on the hourly. Now at the moment on the hourly, we've got a bullish momentum on the price and also the CCI, although notice it's starting to potentially pull back, so just cautiously bullish at the moment on the hourly. Now if we go to the back test, again you would have been going long according to the daily, probably from this area here, so I would have gone long from that period there. Let me just correct that. When the moving averages start bending up, that's ideally where you want to go. And here again, paying attention to those bearish divergence, you would have closed out your positions somewhere in there. You might have had a position or two open at that point, still in profit, and you would have avoided that drawdown. Going long again during that period when both price and CCI are in an uptrend, and again closing it out when both price and CCI start curving down. And that's why I've zoomed out at this level, so you can easily see those moving averages. And as soon as they start turning down, you might have a position open, but stop your or close out your positions with a small loss, or possibly actually that would have been still in profit if you were in that little range there. Again, paying attention also to this bullish divergence, which I missed last time, and again going long at that point. And again, you would have been watching it close. Those moving averages on the price, even though the CCI is dropping off, and then finally closing it out probably somewhere there where we closed at the end of the last video, and you would have closed out your positions. And currently you might be in a new position open at the moment with both the CCI and the price still bullish, because the daily is also bullish as well, and you want to trade in the direction of the daily if you're trading on the hourly time frame. For BOIL on the weekly, it's bearish below the moving average band, and also there on the CCI on the weekly, that's also below. So bearish momentum at the moment with both price and CCI on a downtrend. So if you're trading on the daily, you're trading in the direction of the weekly. On the daily, again, you would have taken short positions from there on the day if you're trading on the weekly, but again, closing it out whenever you see the CCI and the price moving against you. Now, if you're trading on the hourly, you go in the direction of the daily, so you would have taken short trades during this period, and you would have been getting close to or closing out your positions once you see this consolidation. And that's why I've got moving averages. You can see it, multiple moving averages. You can see they're very tight consolidation of those moving averages. So you probably ideally best stay out of the trade until they start to widen. So if the price starts raising from there and the moving averages start drifting apart, then you can probably start safely taking long trades, so long as the weekly, if you're trading on the daily, the weekly should be in an uptrend as well. That's the daily. Now on the hourly, go in the direction of the daily. Again, we had a bit of a bullish run back there if you're trading that. But again, I suggest you don't trade the hourly unless the daily is also moving in your direction. You can see there the daily's flat, so I wouldn't be taking any long trades just to be safe. Now at the moment, the hourly is breaking to the downside on both the price and the CCI. And looking back for any there was no divergence currently for BOIL. Looking at the back test, you would have been taking short positions from this period roughly, and that indicated here on the hourly chart, again going short when both the moving averages of the CCI and the price are in a downtrend, closing it out when both moving averages are starting to trend up. You could probably stay in a trade, for example, during this period, like I said, if the CCI is starting to go bullish, like a bullish divergence, but the price is still declining with these moving averages, you can probably stay in the trade, but you've got to watch it very carefully. That might have been a position you would have closed out at that point there, then going short again, and again a couple of little breaks in that period, then finally closing it out once you see the moving averages start turning up on both the CCI and the price. For KOLD on the weekly, now that's pulled back on the CCI, so it's telling you it's weakening. So if you're trading on the daily, I probably wouldn't be going long at this point until that CCI breaks higher through that moving average range. Even though the price is above the moving average range, I'd like to see that also start trending up. On the daily, if you're trading on the hourly, go in the direction of the daily. Now at the moment, the daily is broken to the downside, so you probably might be able to start taking short positions, but notice again we've got that very narrow moving average range on the price, which is a consolidation period. I like to see those moving averages drift apart like they did back here, for example. And you could argue that's a double top on the price, and that's a bearish divergence on the CCI. Again, I'll mark it. I missed it last time. It's a double top versus lower highs. That's a bearish divergence. And that looks like it's pulling back in line with that 23-38% Fibonacci range. So the daily is bearish at the moment, and on the hourly, that's broken up through those moving averages. So if you're going short, you would have closed it out the very latest by now. Now, what I've done here on the hourly, you would have started taking long positions there according to the daily, and that's why we go to the back test. You would have taken long positions from that period indicated by this arrow, again following the moving averages, going long when they're both up and closing it out when they're both starting to turn down, like in this period there. Long there, watch for that divergence. You can stay in a trade as long as the moving averages keep rising. It gives you a bit of a warning, and then start closing it out once they break to the downside, especially on the price. Where we are at the moment, again going short only according to the daily, so you wouldn't be going long at this point. Even though it's tempting, I wouldn't be going long. Wait for both to either break to the downside, or alternatively wait for the daily to break up through their moving averages to go long. For UNG, on the price on the weekly, that's below the moving averages, although notice the CCI breaking into that moving average range. So if you're trading on the daily, I would avoid going long at this point. It's a bit too early. That could be a bit of a false break to the upside before returning further to the downside. You'll notice here on the daily, it's hit this support at 1172. Again, there's that very narrow moving average range, so a bit of uncertainty at the moment. And the CCI is also doing something similar. Pretty flat range there. So again, I'd like to see this be more decisive and go one way or the other with the moving averages expanding. So the daily at the moment is bullish, but again, I wouldn't be going long on the hourly until we started seeing a more decisive move on the daily. On the hourly, we had a bullish divergence back here. It bounced, hit our target, and it's been fluctuating pretty much sideways since then. It's hit this minor resistance at 1381, and again coming back to the downside on both the price and the CCI. So for the back test on the daily, going short from that period back there, and starting to potentially go long from this period here, and that's what I've got it marked here on the 1 hour chart. Again, following the moving average bands on both the CCI and the price to go short, and closing it out whenever they start both turning up. Hit that like and subscribe button, and for added benefits, subscribe at least on the free trial to my Patreon page, where I publish weekly bullish shares across regions of the world's markets. Thanks, and talk to you in our next video.